Welcome back, traders, to another video. Hopefully you had a beautiful weekend and a beautiful trading session. Today we are going to talk about why your strategy is not working. If you're new to the channel, like, subscribe. Let's jump into it. So stick around because I will be analyzing this trade and why I got into this trade. And yeah, number one is you are too short-sighted. So I want us to go through this equation here and you'll see what I'm talking about. So this well, when I used to trade, I used to look at each individual trade and how much it would bring me or how much I'd lost that day, and it would affect me mentally. It would fuck up my mindset because now all I'm seeing is the loss that I've had. But if you have a strategy that has a win rate of 50%, so for every trade you take, the next day you lose a trade. That is how it works, with a risk-reward ratio of 1:2. And I'm assuming that in 1 month, you trade daily, one trading month. So that means you take 20 trades with a maximum risk of 30 pips and maximum reward of 60 pips. So you'll find that the gross total profits is just 10 trades times 60 pips, which is 600 pips. But the gross total loss is 10 trades times 300 times 30, which is 300 pips. Your net profit is 300 pips that month. Now, if you look at trading and look at it in a negative aspect, you'll see that you have 10 losses. But if you look at the bigger picture, you have a net profit of 300 pips. Now, 300 pips is a lot of money. This is a lot of money. So this is one reason why your strategy is not working, because you're not looking at the bigger picture. You're looking at the time that you have lost. Now, the big reason why you can see losses so much is when you have a losing week. That means you had 5 losses. From Monday to Friday, you had losses. So this actually fucks up with your mindset. But if you look at it in the long term, then you have a very big chance of being in profit. Even if you have a 25% win rate, you'll still have half of this. Number 2 is that you are not following your rules. So I'm using an example of some of my rules. So the rule is simple. Only trade at the high of the week or when the high of the week has been triggered. Entry is only after an engulfment candle. So when the high of the week or the high of the day has been locked in. And then after execution, I leave the screen for 30 minutes. And then record every trade, even with a screenshot, 1 trade per day. And then the trades that are high probability, you can add onto those positions. But the maximum you can add is 5% of your account. Now, these are very simple rules, but when you are trading, you become very stupid. I know I've made very stupid mistakes because the pressure. Now, you find that you don't really follow your rules because either you have too much pressure of making money, or you are revenge trading. You've already lost money, so you're trying to recover. It all revolves around the fear of losing money. Now, another big mistake traders make is when it comes to adding positions. So you see, you look at a trade and you see this is a nice setup. But rather than waiting, so let me give you an example. So we have this broken down market. All right. So say for example, your entry is here. Your entry is here, but you are trying to go long. I'm looking for a trade that, went wrong. So this is your entry. Now, because we have this big engulfment candle, 4 minutes after the 15-minute candle has opened, rather than waiting for the market to break structure, then give you a continuation setup, you stack up a lot of trades. And then when the market reverses, because if you got this trade wrong, this market is not going to forgive you. It will blow your account. And then you start self-loathing and self-hating because you can't really stick to your trading rules. And it's the rules that matter. It's nothing else but the rules. Number 3, which is the last reason here that I have, is that you take too many trades. Now, this, I'm assuming you want to trade or you usually trade every day. This is let's use this example. And then we have this another example. We are using a far much more efficient strategy where you take the best probable setups. So this means you have fewer trades, but these trades are more likely to be winners. So with this strategy, you have a 65% win rate. So for every 3 trades you take, you have 1 loss. All right? And a risk-reward ratio of 1:2. Now, assuming in 1 month, you only take 12 trades. That means you have 8 winners and 4 losers. All right? We still maintain the maximum risk of 30 pips, maximum reward of 60 pips. So the gross total profits is 8 trades times 60, which is 480 pips, with a gross total loss of 4 trades times 30 pips, which is 120 pips. Net profit is 360 pips. You took 12 trades, which means you had more time to do your own things. You had less stress, and you still got a lot of, you got 60 pips more than the guy who traded every single day. Look at that. You cut your trades by almost half. So this is the power of less is more when it comes to trading. And most traders don't really understand this concept, because while we have this mindset, we want to make money every single day. That is the only way you can make the most amount of money, which is just a peasant mindset. Think about it. You are living your work. We are trading because we want freedom. That is why you find people quit their job to come and trade. But then they bring the same employed man mindset into trading. This is how you attain freedom. Finding the most efficient way to make money. Now, let's jump into these charts and see why I took these trades. So, I posted last week on the stories. This is week 1 of this month. And then week 2, we had an inside day. So, for those who are asking whether Monday is always an inside day, to me, an inside day is just a day where the high or the low of the previous day has not been touched. So the price might touch the high and then close inside. To me, that is not a true inside day. An inside day is just consolidation below or inside the previous day's high and low. And then now, day 1, of course, Monday is day 1 as usual. If you are not counting the 3 pushes. This is just the 3 pushes. There is the strategy of 3 pushes and counting days. So, we have our first day which breaks the previous day, which is day 1 on Tuesday. And then on Wednesday, the market breaks above. This is day 2. Now, of course, if you are counting days, this is day 1, day 2, day 3, then you look for your drop. But we have this day 2. Then day 3 breaks above the previous day's high but consolidates. Now, I was expecting the price to break down after this pin, but unfortunately it did not. So I got stopped out at, it's just the these are the costs of trading. I got stopped out on Friday. I did not take any trade because the market was not. Oh, I did take a small position, and I got out with 30 pips because the price we had this double top here. So I was assuming this market was breaking down. Now, it did not break down. So that means we have 3 days of rise and then 1 push, 2 push. Today, the market continued and pushed again in this region. This is a region of liquidity. Price, this is liquid. Liquidity is trapped up top. Alright? So I was not expecting to trade today. I was just looking at the price action. But when we look at the 15-minute time frame today, so we have this pump to the high, and then price comes down and consolidates below this peak formation. So this is a familiar setup where the price, so say for example, it is usually in the bigger time frame structures. So we have the high of the week and then consolidation for the break in structure, and then maybe a parabolic move for capitulation. I've said that word correctly. So this is the same structure. So the market in the first 15-minute candle breaks down and engulfs this candle. And then we have this gap. We have a gap below here. So we have this gap here. So one thing that usually helps me when I see a big engulfment candle with this big pin, I know the next candle must come back to this pin. If we have a pin, the next candle will come to this pin. But now we are at the low of the day. So, of course, once I saw that break of structure here, now the market had been engulfed. I was looking for an entry, and my entry was after this engulfment at 8:30. That was my entry for a 60 pip move, a 30 pip stop loss. Easy, clean setup, in and out, simple. And it followed my trading plan accordingly. We are at the high of the week, we have trapped volume, and then boom, a capitulation. Well, we have this pump, we have this pace. So yes, so some things you'll start seeing them after you've put in your time in the markets to observe, to intentionally look at patterns that form during your window, to understand which triggers you should pay more attention to. So hopefully you got value from today's video. Tomorrow the price might come back to the high of the week, or it might continue lower. We don't know. All you have to do is wait. But we have a lot of we have a lot of liquidity down here, so we never know what the market will do. Hopefully you got value from today's video. Like, subscribe, comment your thoughts, and see you in the next video.